Let's do the periodic one.
Periodic would be accounts receivable.
Accounts receivable. How much?
500.
$500. And
then sales revenue.
Revenue for 500.
And then
you're thinking, is there anything else? And if you're thinking no right now, you're right.
Yeah, I don't think.
Okay, and you're good.
No.
That's it.
Okay.
Right? Why don't we do this?
Because we don't deal with cost of goods sold or inventory in periodic.
Yeah, we do that all at the end. We just went through that calculation just a second ago.
Right.
Okay.
So for perpetual, the goods returned for $40 credit costing $15. So I'm going to credit my accounts receivable.
Credit accounts receivable for how much?
Return goods for $40 credit. $40.
40.
And then I'm going to debit sales revenue.
We never debit a revenue except in our closing entries, right?
Yeah.
So
I'm going to debit in
on inventory, we're going to get to that in a minute. We're going to take care of the revenue. We're going to take care of the $40 credit that we owe them, and then the $15 that it cost us.
So
I'll help you.
I'm going to notice because I need to put it on there. Sales purchases. Sales returns. Oh, I know that because they're returning something, so I'm increasing my sales return account, right?
Mm-hmm.
Okay, sales returns for $40, and then I'm going to credit.
Accounts receivable, which we
Right.
already did, right?
Right. So then I'm going to credit inventory. I'm going to, yes, credit inventory.
Credit inventory. Would that go down
No,
or
I'm
up?
going to debit inventory
For how much?
for $15.
15. Okay.
And then I'm going to credit cost of goods sold.
Okay. So this one we just reversed.
Right.
This one we basically reversed, but we just put returns.
Okay.
Okay. All right. Let's do over here.
Okay. Goods returned for. I'm going to credit my accounts receivable
Credit accounts receivable.
for $40.
We got that one down. Good. And debit.
I'm going to debit sales returns.
Sales returns. Then they may say sales returns and allowances. But
Right. And that's all I do there.
then you're done, right? Because we're not keeping track of this yet.
Right.
We're going to count it up later, and that's going to show up in the end. Okay.
So paid freight to send goods to customer. So paid freight, I'm going to credit my cash, $25.
So we're going to credit cash. 25.
I'm going to debit freight out.
Freight out. Agreed. Why is it freight out and not freight in?
Because we're shipping it out, not coming. We're not
The
paying
goods
for
are
it.
going out. Good. Okay. And our periodic journal entry.
Debit credit cash.
Credit cash. We know that. Good.
For 25, and then
You know it. Just say it. You want to.
I have two things I want to say.
We'll just say
Cost
the.
of goods sold. No.
Oh, we never do cost of goods sold here. We calculate
No.
that at the end.
Freight out.
Freight out.
Are you kidding?
It's the exact
thing?
same.
Oh, okay. I knew it was that, but I was like, no, that's
Like,
right.
it can't be that. They're always different.
Okay, so I need to
Okay.
know that that's okay. Okay. Paid in full, less discount. So we sold it for $500. They returned $40. Minus $40 is $460. So my perpetual would be cash would be credited.
Credit. What does that mean?
I mean debited
Yeah, good.
for $460. I would credit my accounts receivable account.
Or
460.
how much do they owe us? Wait, how much cash did we just get? I don't think, that's not right.
That's
Our
not
cash
right.
number's not right, but our accounts receivable, you were right on accounts receivable.
Okay, accounts receivable is 460.
That one is 460.
My cash though is 460 times 0.03. Oh my gosh, that's annoying. 460 times 0.03 equals minus 13.8 is 446.
446 is what you're getting in cash?
Yeah,
How did you get it?
by multiplying the terms.
Yeah, so you found out what your discount was, which it looks like is what, 14 bucks?
Mm-hmm.
Okay.
And then, okay, cash and then accounts receivable, and then
What is
sales
that?
discounts.
Sales discount. Good.
I'm crediting that too, right?
Yes. Well, no. Look, what's just bigger?
Oh, you're right. So I'm debiting sales return, sales discounts, and cash. And then I'm crediting just my accounts receivable.
Mhm.
Let me redo that. Okay, so I'm gonna debit cash for 446, and then I'm gonna debit sales discounts for 14.
Wow, it is freezing in here.
I know. And then credit accounts receivable for 460.
460.
Okay,
And then we say, yes, we got it right.
there we go.
Okay.
Oh, yeah.
Let's do periodic.
Okay.
This is it.
Okay.
Too much pressure.
This is
You
a
ready
lot of
for it?
pressure.
All right.
Oh my gosh. Okay. Paid in full.
Okay.
I'm gonna debit. I'm gonna wait.
What do we automatically know is going to be the same?
Cash.
We know cash is always going to be the same.
So my cash is gonna be at 446.
So we know cash, we're always receiving $446. What else do we know is going to be automatically the same?
My accounts receivable.
Accounts receivable we know is automatically going to be that 460, right?
Mm-hmm.
So the only question we have is it sales discounts for 14 or is it under a different name? But let's look.
No, it's
Same,
the same thing.
same. It's the same again.
Right. Okay. So sales discounts.
So the sales side is much easier, right?
Right.
Everything's the same. Look, this one's the same as this one. This one's the same as this one. This one's the same as this one. And this one is the same as this one. Okay? What's the difference?
Inventory and cost of goods sold.
And what did we say was the difference between perpetual and periodic?
Right. Inventory. Oh.
Okay?
This is gonna be so much
There's no account name changes. They don't sneak in purchases on us. If we're the seller, this is the only time we care. This is the only difference.
Right. Okay.
Other than that, it's the exact same.
Got it. I got
So
it.
we say a prayer and say, please let them give us as many sales transactions as
Yes.
possible. But they know this is happening, so they don't do that.
I know.
Okay, so we good with this?
Yes.
Okay.
We're perfect with this.